left and right seem to be getting chopped up in the current consolidation range of Bitcoin, and it does not have to be that way. Stay tuned to find out the best ways to profit off of Bitcoin when it goes sideways in today's episode of Breaking Bitcoin. Welcome back to the channel, everybody. We've got a fantastic show for you guys today. Today is January 19th, 2023, foul year of our Lord. Yet another episode 1004 of the Breaking Bitcoin Market Update. My name is Justin Wise, lead analyst and senior mentor at KrakenCryptocurrency.com. And as I said, I hope everybody is having a fantastic day today. It is a good day in the markets. I have spent most of my day in the back end of code. Turns out, did you guys know when you sign up for services and you log in for the first time and then you just breeze right past something, that something is this little annoying pop-up. It's kind of like a Jack Russell Terrier. It pops up in the top right, top left, top, bottom left, top, somewhere in these areas. Sometimes it's right in front of you. And it's like, hey, thanks for signing up for XYZ. Please read our blog on how to use this, follow our tutorial, or go to our academy. And if you click on that button, you learn how to use the thing better. Now, that's comical, but we often find ourselves using products and services and tools on a daily basis, and we run into struggles with things because we haven't stopped, gone back to the beginning, and developed a fundamental understanding of how these products and services work. I'm finding this out on a day-to-day basis when it comes to my website and how I push out emails, how we put out our newsletters, all these kinds of things that we rely on third-party services for that I never really took the time to go back and read not the fine print, but read the fundamentals, read the basics, read the how-tos. And trading is like that too. Trading can often be difficult because everybody wants to jump in, to the, I want to catch big candles. Oh, this, that. Oh, I want to make millions of dollars. Sure you do. Everybody does. Everybody wants to profit off of the market. Trading is that, for most people, it's this idealized dream, digital nomad, work from wherever you like, make enough money off of the markets. And we profit, off these little green and red candle bars going up and down. It sounds like a fantastic job. In reality, it requires a firm dedication. There is no deeper test of your emotional well-being and your psychological stability than trading professionally, trading for serious money, and actually wanting to rely on that as a regular income. Now, I absolutely love it. It's what I do for a living. And, I wouldn't give it up for anything else in the world, but it's not easy. It's not easy. It is challenging, and that journey is so rewarding. So I say this to all of you who are watching the channel tonight, who might watch this later on in the future, to the aliens who might watch this millions of years from now, because everything we broadcast just goes out and keeps going. Commit yourself to adopting the learner's mindset and look forward to the challenges and hardships of life, because they are what strengthen you. They are what make you the person you are meant to become. You have to go through those challenges. You have to go through those difficulties to overcome them. And it's only when you've overcome challenges that you actually have wisdom and knowledge to share with individuals that's actually worth anything. Nobody wants to listen to the unemployed teenager on the couch giving people financial advice. You haven't gone through anything. You don't know. You haven't gone through anything difficult to learn. But when I talk to people who are like, yeah, man, when I was in my 30s, I had to file bankruptcy and this happened to me. I built a business and it failed. My wife cheated on me. All of these things. These individuals have gone through hardships, and I look at where they are in life now, and if they're in a good place and they've gone through these hardships, I know they have valuable lessons to teach me. If you haven't gone through hardships and you're not somewhere in life I want to be, you have nothing to teach me. Remember that. All right, moving on. We've got a great day in the markets. Range trading. Let's break down to the charts and break this down. As always, before we begin, if you enjoyed the content, right down there is the like button and the subscribe button. You guys are the fuel that keeps this channel alive. And as always, if you'd like to work with me or my team in 2023 to grow and build wealth, lots of links down in the description to get involved with the community and work personally with me and my team. Let's get cracking. All right. Pretty interesting day in the markets. Hold on. Let me just kind of creep this on out here and get this chart. There we go. That's nice and sexy, how we like it. Now let's just do the right side. Never had anybody complain for taking my time. You know what I'm saying? All right, cool. Today's been a relatively interesting day. We do have my volatility screener. This is a very simple volatility-based trading strategy that I often use on the lower time frames. Here we have the 15-minute time frame pulled up. And what we've seen today, I just put out my newsletter, by the way, to the members of the Premium Trading and Investment Group. They get a daily update on my trades, on what we're doing in the markets right now. And the things that I kind of pointed out to them is that today's trading opportunity was really the range long here. All right. So if you guys will recall, I am in 3 positions right now. I'm in a weekly long. We scooped up those positions around 17,000. I'm in the daily short playing the overextended daily range, or excuse me, not daily range. I'm playing the reversal opportunity because the daily is quite overbought. So we are prepared for a pullback. And then intraday, I am also long because I'm playing the range. Let's see here. Sorry, my computer's a little slow, loady, laggy, boom, bam, Just give it a second. It'll get there. Still working on the backup laptop. All right, you know what? We're going to hit the refresh button and we'll come back to you in just a second. I was going to show you guys proof of trade from my Bybit account. Long on intraday about 0.338 units of Bitcoin, about a $7,300 position size intraday, taking price to the upside here. So today's price action has been characterized by a bullish advance following yesterday's sell-off, which took us very close to the bottom of the range. Anytime you see that price is in a range, you have to trade those opportunities. This is exactly what I said right before I signed off yesterday. I said, yes, guys, I am short up here, but seeing as we're kind of getting close to the bottom of the range, this is probably not a bad opportunity to scoop up some range longs. And that's exactly what I did last night before logging off of my computer. And you had, price after selling off pretty sharply yesterday, and we had indications here. So this is our BBWP. This is Bollinger Band with percentile, fantastic volatility-based indicator. Just let you know, the most useful part of this indicator is telling you when to enter and exit. It doesn't tell you in what direction, but it tells you when is a good time based on volatility to enter and exit. And this is when we have a massive increase of volatility. Generally, that is a good time to exit. Although, again, you can flip this on their head. I know some traders that like to enter in high volatility, but I prefer to enter in periods of low volatility, right? And then I'll formulate my directional bias in which direction to trade based on other methods of technical analysis or fundamental analysis. So in this particular situation, I knew that we were at the bottom of the range. We just had a large sell-off, so I wanted to trade to the upside. And then what happened right here? Bollinger Band with percentile, the Bollinger Bands got really tight, indicating low volatility. And what does low volatility, what comes after low volatility? High volatility. Low volatility leads to a breakout because you're compressing a spring, and a spring will eventually break out, spring back out, pop back out. And then once that volatility is expanded, it will compress once again and lead to yet another breakout. This is the cyclical, low volatility, high volatility nature of the markets. And again, sometimes you'll have high volatility followed by high volatility, but in general, you can expect a period of low volatility after a period of high volatility, and you can expect a period of high volatility after a period of low volatility. So basic strategy here is to look to enter in periods of low volatility when there's less risk of getting wicked or stopped out and price isn't moving so fast. So we have this nice about 16-hour long consolidation period starting yesterday evening and lasting till just about the market open. So we have price really started moving at right here. This is 7:30 my time, so that's I'm in Mountain Time, so that's 9:30. New York Stock Exchange bells ringing, and price is blowing up. So really, again, this movement is characterized across the broader markets and really picked up with traditional liquidity coming back into the markets for today's trading session. And we have this nice kind of not really blow off top. We have this nice period of high volatility right up here at the range high, giving us a really good opportunity to exit or grab profits. Now, I am still holding my position. The reason why is because I didn't think this sell-off was very substantial. I am kind of watching this now. And another way to interpret this, though, is, run up to high volatility, pull back, and now we've experienced a lower high. So unfortunately, in my position, if we come down here and take out this lower high in our way to make another lower high, that would be my cue to exit the long position. And that's basically going to take away almost all profits. Yeah, so again, about $7,000 position. At the peak of this trade, I was up about $130, only $85 now. And again, as I pointed out the mathematics yesterday, that's not a lot of money. Doesn't need to be a lot of money. All I have to do is trade 10 different crypto assets 3 times a month for a total of 360 trades a year with a 65% win rate, winning $400 on winning trades, losing $200 on losing trades. And that is $75,000 in profit per year. All right. And you can scale that to as much as you want. Right? If you want to double that, then you need to make $800 on a winning trade and lose $400. And then you will just scale. And you can accomplish this with a $10,000 account balance. Again, as I pointed out yesterday, it requires a couple suppositions. It requires that you're going to be trading on a derivatives exchange with access to leverage. And it's also going to assume that you can accomplish a 65% win rate. That's the difficult part for individuals. Here's the rub though, man. Unpopular opinion, but I have spent so many years trading and teaching people how to trade. A 65% win rate is really not that difficult to accomplish. People just get in their own way. There are lots of plug and play trading strategies out there. Ichimoku, RSI, stochastic RSI, this Bollinger Band with percentile reversal volatility system that I'm showing you right here. All of these things, if you just backtest them, have 65 or higher percent win rates. And people just completely ignore that. They just completely ignore it because and they tell you why it won't work or this reason or that reason. They come up with all this garbage. They put all these obstacles in their way when the math's pretty clear. If you just do what you're supposed to do and trade, you can do it. You can totally do it. Well, Justin, not everybody can do it because the markets are a zero-sum game. But here's the thing, man. How many of you, 18 of you are watching this right now, if my count's live. 18 of you are watching this, right? And statistically, less than 10% of you will go out and actually take action on the things that I'm teaching you about. And I'm not trying to be rude. I mean, you guys are kind of the core group, so it might be all 18 of you. But statistically, like when I put out all this information online, when I do my videos, when I show alpha, when I teach people how to make profitable trading strategies, one thing I'll hear is, well, Justin, like you can't reveal the secrets, right? Or everybody will but it's not true. It's not true because 90% of individuals, probably 95% of individuals can't be bothered to get up off the couch and do something about it. They won't. They won't change what they're doing. They won't implement new routines. They won't document their strategies. They won't stick to a mechanical strategy. They will trade emotionally. They will revenge. They'll do all the things they're not supposed to do that they know they're not supposed to do. So don't tell me that I can't share alpha. Share as much alpha as I want because I know it's not going to work. And this is true. If you go and look at, any successful marketer, businessman, anybody who sells anything online, anything like that, right? They give a lot of stuff away. They give a lot of high value stuff away for free, right? They're selling their secrets. No, they just know that most people won't act on it. So anyways, okay. So yeah, 2 potential ways to look at the market. Again, I'm going to hold the long. I will close out and eke, I don't know, maybe like $30 if we come down and close below this current lower high, invalidating the current market structure. But for now, we do need price to break out for me to reach my price target, and we just need to come up here and trade above the highs, which will also indicate another breakout trade. So yes, could I have structured this trade differently so that we didn't need to go all the way up to the range highs? Yes. But as you can see, my entry isn't perfect here. I wasn't able to grab any of the wicks. And so to be able to set my stop at an appropriate level based on the volatility, because I always use volatility adjusted stop losses, this is the current structure of the trade. We're still high from up here. And we're still short from up here. We're still high from up here. We high from up here, boys. High. And that's all we got. We're going to break down the bigger weekly picture and trending picture, but that's the current trading opportunity as I see it today. Let's take a moment and address the chat. Say hello to the wonderful people who make this show possible. We've got Starman Jack coming in from breezy, sunny, beautiful Australia. Morning to you, my friend. Aaron Webb, hola to you. He also chimes in, welcome the challenges, not fight against them. Absolutely, my friend. This is what happens when you don't use Chainlink for your proof of trades. We've got Swing Trade Pros, Evan in the house. What's going on, my friend? And we've got Andrew Munns saying, holy moldy. Oh boy, man, you got to check that fruit drawer. He says, I'm still watching this Netflix earnings bore. They don't ever get to the point. Wook Chewy, you're right, my friend. Thank you so much for your attendance today. Andrew Munns teaches everyone what I do that wants to learn. There's no competition in trading. Top 10 facts thinks that the majority of people that lose money don't have risk management. I absolutely agree with you. Swing Trade Pros making money in the altcoin world. Falling wedge on GRT, the graph. Mike D's fitness journey says, I trade on sarcastic RSI with 10 to 20x leverage and put a stop loss. Not familiar with the sarcastic R. Oh, do you mean the stochastic? Is that voice to text? Yeah. I'm going to assume that's stochastic RSI. I've never heard of the sarcastic RSI. Is that like when it's oversold? You know, it's like, well, you could go long, but I bet you won't. You know what I mean? Like, I wish I had a little bit more feedback from my indicators, like audio feedback, like, yeah, I get audio alerts. Like I get the beep, beep, like when one of my trading strategies goes off and I need to do something, but I just prefer it if like, really looking for, I mean, there's synesthesia right now. I'm actually playing around with that with, ChatGPT and Stable Diffusion. And, I've got my own API key and I've been building a couple like very simple like language things off of ChatGPT, the DaVinci codec. And recently I saw that you can easily plug that into synesthesia so that synesthesia can like have the AI portrait that will read and its lips move. And then it uses, I don't know if it uses Parrot or another AI voice generation software to do it, or if it's all built into synesthesia. I haven't really looked into it too much, but I saw that it is possible. So that would be kind of cool. Like if I think I'd just get a dedicated screen up here with my little AI avatar talking to me. I'm all about it. I am all about it. Hard light 1, 2, 3, 4. Hey Justin, do you still trade the double VWAP strat? Double VWAP strat's good, man. Double VWAP strat's good. I was in the process of automating it. I haven't traded it in 2023. So I haven't traded it all this year. I'm rolling. So my goal for this year is to roll with the volatility system that you see me right here with for the intraday timeframes, and to focus on the weekly trend and daily trend for spotting reversal opportunities and making sure that I take advantage of pullback opportunities this year, and using my pathways to profit strategy on the daily to catch the big moves. But double VWAP is good. Double VWAP is good. I was in the process of automating it, and then I kind of ran into a brick wall on programming it. And then unfortunately, I kind of got put on a shelf. I should revisit that because that's a good strategy. That is a good strategy. Creative Innovative, good morning to you, sir. Marcus says, cancel Netflix, bro. Waste of time. I think he's talking about it's earnings season. So he's listening to the Netflix earnings report, trying to suss out which way to trade. He's being sarcastic. All right. Yes. Hey, you see how this thing is smooth, man. There's a lot that goes over this head. Just like, Salty Texas. Shout outs to you, my friend. Not sure what you mean. You could go long. Yeah. All right. Good stuff. Good stuff. Thank you guys for the comments. Thank you guys so much for being here. You guys are the fuel to keep this channel alive. Let's now, let's widen it out. Let's look at the full picture and break things down here. All right. Weekly time frame, and we'll go ahead and switch over. We'll switch from Bybit to Binance. And we'll throw on our trend detector. And we can talk about what we got. We'll go ahead and hide our levels of support and resistance for right now. And we are currently in a market regime of, we're in a bearish market regime. All right. One weekly candle does not a bull market make. All right, guys, I know it's exciting. The price expansion that we saw last week, the volatility that we saw last week, the final, like, oh my God, price is going up for the first time in a year. Like, oh my God. Go long. And, listen, as always, those individuals might be right. Cryptocurrency has this very unique ability, and the markets do in general, but particularly in cryptocurrency. And I don't know if it's a facet of how quickly the candles move or how much of a cult following cryptocurrency has, or how much you can get into it. And then, like the investment opportunities start to cloud your trading judgment and all of those things for whatever reason. Cryptocurrency has the unique ability I found among all the assets that I've traded to really humble you. And like if you, I've said this before, most, you would think, right, that you would meet a successful trader and they would be sharp as a tack. And that I have met smart traders, but I'm just being completely honest with you. The majority of profitable traders that I've met are not what you would consider classically intellectual. They're kind of not, you know what I'm saying? And I think that one of the reasons why that might be is because those are individuals, like, it's kind of like Dunning-Kruger effect. The less you know about something, the more confident you are in your ability at that thing, right? So for example, like you find this with traders all the time. A new trader will come in and they'll have just watched a video. They'll be all jazzed up. They'll be extremely confident. They'll be running around like giving advice in our Discord, and then they get wrecked and then they kind of disappear. And then once they get wrecked, they start to question themselves. They start to doubt themselves, because that's Dunning-Kruger, right? Like you don't know how much there is to know about something when you don't know very much about something. But as you learn more about a subject, your scope of how much there is inside that field expands, and you realize how small your knowledge is compared to what it could be. And the unfortunate side effect of that is what introduces self-doubt and self-criticism in your thinking patterns. And that can also hold you back from success. Ignorance can hold you back from success, but so can lack of confidence in yourself. And that, unless people will have faith in you, less people will come along with you and follow you and be willing to let you lead them, because that is kind of baked into how you deal with people and handle yourself. Whereas certain people, doesn't matter like how long they've been doing something. They just kind of stay in that like dumb, blind confidence of their ability. And those people often make good traders, right? Because they just, they just refuse to question themselves. So I'm not saying you can't be successful and profitable if you're smart. I'm just saying that's just something that I've noticed, right? What I've noticed is that in trading, particularly some of the most intelligent people I've met who you think would be like, oh my God, this dude's like a mathematical genius. Like this dude's written like 19 dissertations. But then when it comes to trading, they're so full of self-doubt and they question themselves over and over and over again that they never really get out there and trade effectively, consistently, and profitably. They're always like, tweaking around and changing how they do things. And you can't do that. You gotta pick something, stay consistent with it, right? Like for 6 months. I tell this to people all the time, like just pick something, pick an indicator and only trade its signals for 6 months. Like just do that and see what happens. Right? Weekly time frame. One bullish candle does not a bear market make, but we cannot ignore momentum. We cannot ignore volatility. We have now, for the first time in this bear market, broken above not only the 21 weekly exponential moving average, but also the Tenkan-san leading line of the Ichimoku cloud, which have been very potent and powerful in dictating this bear market thus far. So let's see here. I just wanted to double check. Yes. So we have made a higher high now in this bear market on the weekly time frame. As you can see, our previous weekly lower high was $21,480.65 as the crow flies. And this current candle's weekly high is $21,650. Very significant. Generally, smart money concepts would tell us that after we break above a previous, so in a shift in trend, or what they call a change of character or a chach, we would break above a previous high first, and we may go significantly higher than that or just wick above. But often after that situation, we would experience a pullback. What we would want to see is a higher low, right? We want to see a low that is higher than the current low. So the current weekly low is 15,476. So ideally, to be confident in a powerful change of character or shift in trend here, we would want to see a pullback that is higher, obviously, than this. A lower low would invalidate this potential shift in trend. And then classically, you would wait until price breaks the newly established high to take the breakout trade and go long and be very confident that we are now in a bullish trend, and kind of shift all your gears into, oh my God. Now, as I said yesterday, we've seen this kind of end of bear market behavior many times before. And so if we just go back to 2018, if we just go back to 2018, we see something very similar to current price action, where price collapsed. Obviously, it consolidated for significantly longer than it did in this pattern in 2018 than it did this time. But then we have a sharp sell-off, a longer sell-off, and a stronger sell-off than we saw this year, and then a long period of consolidation and a breakout candle. And the question I asked myself is, if this is really the end of the bear market, is the current weekly candle this candle or this candle? And the big difference is that if it's this candle, which just kind of showed an interruption in character, didn't establish a higher high, there was an opportunity to buy the pullback. Whereas if it's this candle, there was no opportunity to buy the pullback. Price just went and climbed up, I think, about 200%. So it matters. And it also could be completely unique. But these are just things that I think about and help guide my trading decisions as I look at the markets, as I look at the charts. So getting back to the idea of trend, this is significant. It is important. Unfortunately, we want to be cautious coming out of such a strong bearish trend. And we want to be, we don't want to get our expectations up too high and get overly enthusiastic that this is, of course, the end of the bear market. I want us to be prepared. I'm prepared for lower prices down to my original price target that I put out last year of 12 to 13,000. And we don't really face significant resistance. We've got a couple pain points here. Up at about 22,800, which is where I've got to take profit, a target set for my weekly long. And then up here at weekly resistance at the 200 weekly simple moving average, around 24,400, 500, right around that zone. So it'll be interesting to see if we have any significance there. But those are the areas of the chart that I've kind of marked out. We have weekly resistance, intraday, and daily resistance. Looking at reversal structures here. Let's hide our support and resistance again. Again, contraction of volatility on the weekly time frame. We're not yet trading above, so not significantly overextended on the weekly time frame. And the highest conviction play is still this weekly regular bullish divergence that we've experienced. Notice that we were oversold back here during our previous consolidation range on the weekly time frame, and the FTX collapse gave us a higher low. So we had nice regular bullish divergence on the weekly time frame that is now playing out. Other than that, not too much. Not too much coming in here from the weekly. So conviction still remains with holding the counter trend weekly long up to higher price targets and being cautious and prepared to shift in a massive way short on any signs of significant volatility or signs of rejection on the weekly time frame that would give us an indication that the weekly bearish trend is about to resume. Coming down to the daily, and starting off with trend first, of course. We've had a nice, beautiful, bullish trend. We have shifted into a regime of consolidation over the last 5 days. Big wicks to the upside, big wicks to the downside, not a lot of price movement, volatility constricting on the lower time frames, all indicative of consolidation. Our fastest moving averages are just now starting to catch up with price. And often when we have a big, powerful trend, it's when the moving averages catch up with us that we get resolution of the range and we get that break in either direction. So we do just have a daily candle close, and we closed today's daily candle out at $21,071.59, and immediately starting to see a little bit of sell side pressure coming in on the daily. We weren't able to advance significantly high into the upper range, about a 50% retrace. And again, those moving averages catching up with us do bode fairly significantly, but we are above all our major moving averages and resistance on the daily time frame, which tells me as a trader that I should be looking for and targeting pullbacks to these zones of support. The 200 daily simple moving average, the Ichimoku cloud, and the 55 daily exponential moving average are very important and significant in this aspect. Moving on to reversals on the daily, we are, of course, quite overbought and overextended on the daily, and also right in line with kind of the double VWAP strategy. What we've seen here is price trend above the upper envelope of the Bollinger Band and then trade back inside it. At a time when we are experiencing overbought conditions on our momentum oscillator and also our Laguerre PPO. And typically, if price trades above the envelope and trends strongly and closes back inside, that's when you would exit your trade and maybe take a punt at a reversal long. So the reversal short. So a reversal short does look attractive to me here. The Bollinger Bands would have us targeting somewhere around 18,712 and just to the middle line, the median line of the Bollinger Bands. And if we go back to the trend, we can see that we have our 200 daily simple moving average coming in at about 19.5. We have the top of the Ichimoku cloud coming in at about 19,100, about 19,150. And that 18.5 has confluence with where the 100 daily EMA is and where the 55 daily EMA will likely be. So pretty significant retrace that the Bollinger Bands are calling for. But again, looking for a pullback to this zone right here and targeting that is a high conviction play that we are currently positioned for. My personal trading strategy pathways to profit is currently flat divergence actually right now. So our momentum oscillators are moving down as our, sorry, I set this earlier, but it did not stick. Let me just make this quick adjustment. There we go. Okay, and showing a little bit of divergence. So no way to get away from the fact that the daily's overextended. Looking for a reversal, targeting a pullback in this range is a no-brainer. But we don't want to get overly bearish because we do definitely have, after witnessing the strength and power that the bulls can have in this range and seeing that the bears have as of yet not been able to definitively swat price down, we do need to keep ourselves open and ready to buy breakouts or continue to trade the range, which is exactly what I'm doing. So quick recap and summary. Where are we at? Long on the weekly since 17. Completed a successful daily long. Short on the daily. Long intraday. And ready to buy a breakout or breakdown of the range and add to those positions. With that being said, let's switch back to the split screen. There we go. And take a quick look at the chat. Red PQ, welcome to the live stream, my friend. Aaron Webb is calling for continuation. Red PQ says that Bitcoin looks extremely bullish like back in 2019. Heck yeah, man. Profit Bear is here. Good to see you, my friend. Andrew Munn set his buddy's 8-year-old kid up with a $100 Forex account on MetaTrader 4 6 months ago. Set her up with the algo, showed her the rules, had hit the buttons, bracket orders, and how many micros to buy. She hasn't blown the account up and it's $350. See, that's the thing. That's the thing. I bring my 5-year-old in here and she is eerily good at telling me whether price will close up or down. Profit Bear says, random thoughts. Do we see this candle as a delta? Need to be a little bit more specific, like delta volume. Starman Jack says, death cross on the weekly, possibly. Yeah. So I've got a video about death crosses and golden crosses. I'm pretty sure I have a video. I don't know if I've got a video on just about everything. In my experience in cryptocurrency, those, I've back tested this many times, and those are best traded contrarily, historically. If you longed death crosses and shorted golden crosses, you would have made money more often than not. Whereas if you would have taken them in the right direction, you would have lost out. And I think that's just because of how quickly cryptocurrency moves as opposed to other assets. But that's not to say that golden cross has not led to profit and death cross has not led to. Actually, I don't think a death cross has ever led to profit, honestly, on the weekly time frame, actually. Well, you're probably right. Women make a lot of better things than men. I'm not going to lie. All right, let's hop back down to the intraday and slap our volatility system on before we say our kind of closing remarks here and skedaddle. Yeah, again, just, stochastic RSI is paired very beautifully as a momentum oscillator with BBWP. Get an exit opportunity. Price went oversold here and opportunity to re-enter. And price is dipping down. This is nice. We like to see this nice expansion while volatility is dropping. This is very nice to see. Will we see rejection here, or will we continue to climb, make a new higher high? Again, things I would be watching for. I entered in about this range for the range high, or excuse me, near the range low. If we break this higher low, I would exit the position in profit. And that's about it, guys. We want to be prepared to buy a breakout. 2 levels here. I do have my intraday support at 21,439. So right about here. This is the level we've been able to close above. So any lower time frame close above this level would likely warrant a breakout trade. And then I have my daily level of resistance, which is 21,650, which is the current actual high. Any daily close above that would likely warrant a breakout buy on the higher time frame. Those would be my recommendations and suggestions. And with that, guys, that's about all I have for you. I want to thank you guys so much for joining me for another fantastic episode of the Breaking Bitcoin Market Update, brought to you by KrakenCryptocurrency.com. If you guys are interested in improving your trading ability, make sure to go check out my free e-guide, The 5 Mistakes Holding You Back from Profitable Trading. This is a guide that I've compiled after my years of experience in the markets and mentoring thousands of students across the world on how to build successful strategies. The guide is completely free. There's the link down in the description. It's the first link, 5mistakes.KrakenCryptocurrency.com, to go get your free copy. Let me know what you guys think, and I hope it helps you out as much as it helped the test group. Other than that, guys, I will be back tomorrow. Same crypto time, same crypto network. I hope everybody trades safely until I see them the next time. And as always, if you have any questions, comments, concerns, sarcastic remarks, hot stock tips, or death threats, leave them in the comments down below. I'll see you on the next one, guys.